Hi traders and welcome to the Technical Analysis Market Watch on Friday the 2nd of June. So I've seen some good action in the last day's trading because the debt ceiling looks like it's been rectified and the market likes what it sees, but it is a non-farm payroll Friday. So let's see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD. And look, you're going to see a lot of positive candles in the last candle, obviously because of the news. And you can see that the Aussie is no different. It found support at the level where we would expect it probably would, because it was resistance here for quite some time at around that 65.10 mark. And really, look, you can see, even though that was back in October and November, that it is still quite significant because there is quite a bit of movement there. But as you can see, we had a big long leg doji. Big long legs on either side, and it did bounce off that support, obviously. But again, it is news driven, so we have to be very mindful of that. It's approaching, or it's very fast approaching another resistance zone. As you can see, we can see a lot of resistance right through this point here, and of course, 20 moving average is right upon it as well. So it's got a bit of work to do before it goes really much longer than this, I would expect. But if you're going to take a trade and really look for a long position, I'd be wanting it to break this zone first here. It needs to get past the 20 moving average, and of course all this resistance, really there's quite a bit there, so you got to be very careful of that. At the end of the day, this is still a long-term short trade. You can see we've got a series of lower highs and lower lows, so just bear that in mind, that although the news has driven it up, it has been in a long-term downtrend, and it's fast approaching very, very strong resistance, so just be really mindful of that on the Aussie. Look, on the short side, of course, it needs to break this level now. Now that it has actually formed this base, we wouldn't be looking at opportunities to go really low until it actually breaks past down this level, around that sort of 64.80 again. But if we find that rolling over at the 20 moving average and it does start to trend down, you can see that this is obviously going to be your first target for a scalp. So if you are scalping, this is going to be your first target, and then a break of the 64.80, and then we look to push down past and get down to the 64.20 as the next support zone. All right, we'll move over to the US dollar CAD now. And again, another big red candle. You can see that it hit the resistance point late last week, and it has been weak ever since. It did reattempt to test that level, but this candle here is really a telling candle. When you see a big move up like that and a rejection, it tells you that the sellers have definitely won that war, and you can see that it's actually started a pretty heavy move down. Again, news driven, of course, but you've got to still be mindful that it was weak prior to actually the candle starting. So when this candle does reject like that and you see it close very close to the open, but the buyers have well and truly been reversed by the sellers, you know that is in a little bit of trouble, and you're going to be on the lookout for short trades anyway. The level of support that you're probably going to expect is coming up fairly shortly. The 134.20, 200 moving average, definitely a zone here where it's going to be highly interactive, because we've had a heap of price action. When you look at the price action right through this period here, and you can see that effectively every day touched this price nearly for, well, you could call it nearly 3 or 4 weeks. And again, right through here, you can expect that you're going to find some sort of support there. So if it gets there, look, it's obviously too short to scalp now, but if it gets there and starts to reverse and starts to look like it's going to go long from this point onwards, it wouldn't be a bad support zone to take it to the next level. And the moving average would be the first place I'd be looking for the take profit, around that 135.20 currently. But if it happens fast enough, the moving averages will still be there. The 20 and the 50 aren't going to move that fast. So really, it really comes down to what happens in tonight's trading. We'll see what non-farm payrolls gives us. And if we do see some buoyancy at around this level, the logical target's going to be up to the 135.20. If we see a continued sell-off, of course, and the daily closes below the 134 next on Monday. So say you're there on Monday and we've got a big bearish candle and we're closed down below the 200 moving average and below the 134.20, then the next target for this one is around that 132.20 as well. So another 100 points from that zone, but I wouldn't be even looking at the shorts unless that zone gets broken by a daily candle. That's really important to remember, that that's very strong support. So I wouldn't be just jumping in on that sell. So just keep an eye on that one. All right, US dollar yen. Similar boat in the sense that it had obviously a very, very big move, but it's been a relatively weak week for it. You can see here, though, very, very important zone being approached. 20 moving average as well. 138 is very, very important for the yen, as you can see. It's fast approaching it. We've had 4 negative candles in a row now, and you can see here it's all but on the 20 moving average and this very important roll reversal zone. So this is a very important zone for, obviously you can see the support through there, resistance, 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 and now we would expect that support will be there. And if it does, we don't automatically buy there, right? We must be very mindful that you must wait for that turnaround. You want to see a series of higher highs and higher lows on a smaller time frame to validate that the momentum has shifted from the negative energy that back up to a positive move. When we start to see that, even on a 1 hour, if we see a series of higher highs and higher lows from that base, that gives us the opportunity to go long. And the very first target's going to be the previous high, of course, which is around that sort of 140.80 area. That would be the first target for a scalp. And if it breaks that, of course, then we start to push up higher. But in the first instance, that would be my target. It's still, a couple of hundred pips away, so it's not a bad move if you get that reversal here. Of course, a daily close below the 20 moving average and below this level bodes more weakness for next week. And if that happens and we're trading on Monday and that's what it looks like, then the 50 moving average will be the next point of call, which is also around a bit of a zone. You can see we've got some fairly active movement right through this level here at around that 50 moving average, which is around the 136.20. But again, though, that's one of those ones where the price has to break through that level before we even anticipate trading for a short, because it's been strong for a very long time, and this may well be just a pullback that, and look, if we drew a Fibonacci on that thing, I can almost assure you that it's going to be a 38.2. So, realistically, if you drew, let's have a look. I'll pop it up there for you. Oops. I'll just get rid of that. Hang on. I'll get the fib again. And we'll pop it on. So you can see if we draw the fib from that level there, okay, it's also sitting at a 38.2. Let's double click that. So if we zoom that in, you can see that not only is the 20 moving average there and the roll reversal, but it's also got a 38.2 right at the zone right now. So you've got to be mindful of all those things. But if they all get broken, then it bodes well for the short. But until then, a reversal at this level is a really potential opportunity to get up to that 140.80 again. But again, you want to see that higher high, higher low sequence on a 1 hour at least to actually, place a trade in that direction. Let's head over to the US dollar. We'll go to the index now. As you can, obviously, no real surprise here. It's sold off down to the 200 moving average at the moment. I'll zoom it out a little bit. It's been very, very strong, just like the euro's been weak, and it's been showing signs of a little bit of weakness over the last few days. Obviously, you can see that we've got the shooting star there, and also the big red candle of today. But of course, the euro is the one we really want to check out because it's the one that you're going to trade in this instance more than likely. But it is at a level of support now. You can see right through there, that blue line there at around that 103.40 is support, and the 200 moving average. So we could expect a little bit of strength repurposing itself here, and of course showing weakness in the euro. So let's have a look. The euro found itself on the 200 moving average and the roll reversal zone. No real surprise there. It's been a big sell-off, obviously the inverse of the dollar index for the most part. It's this candle is all buoyant mainly because of what the everything else is doing, of course, a bit like the Aussie. So I'd be very mindful of that. The 20 moving average would be the first target I'd be going for, though. If the strength continues here and it looks like it's going to continue up, I'd be looking at taking profit at the 20 moving average if you are long, because I think they're still very volatile here. I'm not convinced that the euro is finished actually on its downward spiral. So I'd be very mindful of the levels above. We know we've got a 20 and a 50 moving average cross now, and it's just been selling off. This is just a bit of a pullback, really. I wouldn't be looking at long opportunities on the euro until it was trading well above the 20 and the 50 moving average on a daily. That's going to take a daily close above 108.50 for me to be convinced that it's going long. Unless, of course, we get a series of higher highs and higher lows on a daily, and that would be different. It would take a daily higher high, higher low lightning bolt to actually stop this trend in my mind. So unless it actually gets above these moving averages or forms that lightning bolt, I'm not interested in any long opportunities. But if you are in, the 20 moving average would be the likely target. A rollover at the 20 moving average, and I'd be targeting the lows in the first instance back at around the 107, and then of course a break of that level would see us back down into the 105 to 30 odd thing pretty quickly if we get a daily break below the 106.30, because then that support has been broken and the trend will continue down. So not bad trading on the euro, but you've got to wait for those opportunities to present themselves. And then, of course, the S&P 500, well, obviously this is going to be the one that's going to react the most to any debt ceiling news. And obviously, but we have got an on-time payroll, so I must stress that we do get a lot of sideways movement on those particular days. It hit the 20 moving average. Look, from a buying perspective, it did everything you needed it to do, right? We've got resistance everywhere. So this is the role reversal zone. It broke through, came back and tested from above, which is technical analysis 101. 20 moving average catching it as well. So it had a very good base to bounce on. All it needed was anything positive to actually really send it up. So really good place to actually take the long. But you got to be, obviously careful when you are doing that around news, that, news results don't always go in the favor of technical analysis, and especially when they're really, really important, like a debt ceiling deal or non-farm payroll. So you just got to be very mindful of that when you are trading. I would be, on the side of probably watching and letting the market play out today. On Monday, if we're looking at a new high, and that's what we're really looking for now, if we get a break of this level here of the 42 sort of 40 area, a daily close above there, if that's where it's trading on Monday, you'd be looking at long opportunities, and it's probably going to be a pretty positive week, because I'd say a lot of the badness is behind. But of course, if it fails at this point here and it finds itself at this support level here again on Monday at the 41.80, which is obviously very strong, I would be looking a lot more at potential weakness, because it's had its chance and failed. But I wouldn't be taking any shorts until it's trading under the 20 moving average. So it needs to be trading under the we'll say the 41.80 and the 20 moving average on a daily to be looking at opportunities down to back to the 40.80. If it's hovering above the 20 moving average and in this zone, which may well be on Monday, then I'd be looking for long opportunities when it does eventually break the 42.30. So stick within this zone for scalping if you are going to in today's trading and early into next week. And then once it breaks out either past the 42.40 or below the 41.80, that's your trigger to look for potential opportunities short down to 40.80 or up to 4,300, which is the next support zone or resistance zone for it, which was support previously. So pretty good trading. We've seen some action, and I think the action is going to really start to kick off next week once we get non-farm out of the way, and the debt ceiling news is all behind us again. So we'll keep a very close eye out on that, and we'll see if these levels do get broken. I hope everyone's had a great week's trading. We've had good opportunities. Have a great weekend, and I look forward to seeing you all next week.